All right. Good morning, good afternoon, good evening, wherever you may be. Welcome back. We got a couple different things what you've seen before. So I am Blair Armstrong, I'm Coldwell banker. I am a global luxury specialist out here in the beautiful Coachella Valley. If you don't know where Coachella Valley is between basically Palm Springs and all the way to Indio. What's a global luxury specialist? We specialize in high-end real estate. Have a couple people that you may have not seen before. Well, actually, you've seen Sean before. You missed us over the last couple of weeks. We've talked about FHA loans, conventional loans, bank statement loans. The list goes on. And if you missed those episodes, we'd love for you to go check out our YouTube channel. And on my right, possibly your left, depending on how these record today, is Sean LaRue of Sean LaRue Homes. And then on my left, the way that we're recording this today is a agent and team member of Team Armstrong, David Schreiner. Typically does not get the pleasure of being on here, but today we brought him on. So welcome, everybody. How is everyone doing? How are you, David?
Good. Super glad to be here. Thanks for having me on, guys, today.
Yeah. So we decided he was sitting around. I'm like, hey, you want to become famous? Because you know how famous Sean and I are.
The Globetrotter David. Yeah.
Yeah. So if you haven't followed David yet, follow him on David Team Armstrong. He's an up-and-coming agent. He's been in the game for about a year and a half, 2 years, learning. He got in just at the right time when the market bottomed out. So he's learned a lot. He's actually earned his way by doing real estate the right way. It's not falling in his lap. He actually has to cultivate relationships. So it's really cool. But besides that, man, Sean, how are you doing, bud?
I'm doing good, man. Moving, shaking, loan making, maybe.
There you go, man.
I love it.
Cashing checks and breaking necks, right?
Yeah, something like that.
There you go. All right, guys. So a lot has been happening. We weren't with you last week with just a whole bunch of stuff going on. So we're sorry that we missed you. But as of today, Sean's got some really great stuff to you. I'm sure that you've been following the news. It looks like we're going to get a rate cut. Sean and I have been telling you. I've been telling you. Sean's been telling you on his own. Hey, it's coming, and be prepared because when it comes, a couple things are going to happen. Rates go down. Guess what happens on the other side? Prices go up. So now we're here. So here we are. We are still in a kind of lackluster area of low inventory. Now, I did hear something the other day, Sean, and you probably heard this too because you do work out in Palm Springs. Inventory in Palm Springs is about 5.5 months. But I think that, with that kind of what happened with why is Palm Springs have so much inventory now than it did before? Well, investors found out that it was not as easy as it was to get short-term rental stuff. And so it is not conducive for them to have real estate. Have you been hearing the same thing?
Well, I mean,
on that.
What comes to mind for me is that, anytime there's kind of a holdup with the inventory, everybody's kind of waiting for the same thing. Buyers are kind of on the sidelines. Sellers don't really want to come on the market because they don't want to be on the market for 5 months.
Right.
And so I think it's all going to kind of balance out all around the same time. I think the same thing buyers are waiting for are the same thing sellers are waiting for. Basically that if somebody can sell and get a good rate and somebody wants to buy and get a good rate or whatever the circumstances are, they'll come together. And we're going to get more inventory. That those days on market are going to come down. The prices are probably going to come up a little bit because we have more buyers, a bigger buyer pool, more demand, and so we're on the verge of this kind of shifting a little bit. So, I don't know. That's what I think. I have a degree in economics, but I don't know much in general. We'll see how it goes.
Don't tell anybody. They might ask you to run for president.
No, I'm not doing that. I know better.
So, David, what have you heard about on the streets lately? What's going on in your world? You're really cutting your teeth kind of on the first-time home buyer, some different type of real estate. Have you heard anything from your clients of what the holdup has been or the hurdles that they're trying to face?
Yeah, some of the stuff. So I'm actually working with Sean right now on one of my clients. They're a first time home buyer. They've been on the fence kind of for a little bit, and now the interest rates have been going down. They finally decided, like I just told them, like, hey, I don't think it's gonna it's go time. Basically, go for it. If rates drop any lower, we can go ahead and refinance, but let's get you into something now versus later. Kind of like as you were stating earlier, if rates decrease to a certain amount, home prices might go up again. So I think there's going to be some incredible opportunities within the next couple months for certain people. So
yeah. Speaking of that, Sean, right now, what are rates are right? What are, as of this morning, what did you have? And so again, this is Thursday. Excuse me, I apologize. Wednesday, September 11th. So when you're seeing this, this is what day that is. So what do you have as of Wednesday, September 11th?
Yeah, interest rates right now are in the high fives to low sixes, depending on which program, government programs, and points you're paying. Um, no points. You're looking at like 6.25 to 6.3. There's different ads for condos and different things out there, but this is the best we've seen interest rates in the last 2 years. And
Yeah.
let's put it in perspective too. I mean, when I first got in the business in 2005, 2006, interest rates were in the 7 to 8 range. And anytime you can get an interest rate around 6%, that's where we really see things moving.
Yeah.
So I think we quoted David's client like 5.75 or something silly like that. Like I was just blown away by what we could do for him. It was an FHA loan. They have great credit. But let's put it in perspective. Like what is your trigger rate? What moves the needle? And how much of a payment difference every month are you willing to continue to put your life on hold for? I
Right.
mean, an eighth in rate could be, only $35 a month. Are you going to put your life on hold for $400 a year?
Yeah.
Like, let's
yeah.
put it in perspective. Get in, marry the house, date the rate. It's a
Right.
great opportunity. And then if rates go to 4.75, you're just going to be doing better than that. So it's a great opportunity, and it's way better than paying an additional 25, 40, $60,000 if prices go up. So lock in your equity, now, so that you're not paying a higher sales price later for those lower rates.
I think it's a really important discussion to have with someone who's actually really well versed in mortgage or is on the real estate buying or selling side of it, instead of just listening to the news, because there's a lot of smoke and mirrors out there. You hear this from one outlet, then you hear this from another outlet, and then they're like, oh gosh, like I just want to put everything on pause. So I think sitting down and talking with someone about this who's actually in this day in and day out
Yeah.
could help a lot too.
So you brought up, and I'm glad that you brought this up, because obviously David and I have conversations. Sean and David have also had conversations, especially with their client. So you had these guys are going in looking for a piece of property. You've been searching for a little bit. Obviously, rates dropped, and so when they kind of found out how much they were be able to get, they were able to, from my understanding, you correct me if I'm wrong on this, so help me this, they were able to get a little bit more than they thought.
Exactly.
And how much of a, when they had that, what was their mindset? What was their thoughts about them? Because it's always nice to know that you get more money. Does it cost you a little bit more? Absolutely. But what was the conversations that you had with them once they realized that they qualified for a little bit more?
They realized that they could jump on something sooner than later. I mean, the payment difference between what they were looking at between getting something that's kind of really more fine-tuned, toothbrush ready, and not would be about $200 more a month. Correct me if I'm wrong, Sean, something about that. But I mean, to get something that's actually really well built within their price range and whatnot, that they can actually just move in and live in right away. It's a no-brainer. Like you said, why are you going to put your life on hold for such a minimal amount if you can get into it sooner than later? So I think that was a very important subject that he touched base on earlier. So
are they renting right now?
They are currently renting right now.
So how much of a difference between what the rent that they were paying to what their potential mortgage rate was? Did you ever discuss that?
Yeah, so they're probably looking around right now. I think they have it's like a 2-bedroom, 2-bath apartment. They're around $2,000 a month.
Okay.
And then now they're probably looking closer to like around $2,900 to actually own like a 3-bedroom, 2-bath house that is pretty much toothbrush ready. So
which is
huge difference.
And I think that Sean, you can add into this too, because you deal with this so much. But when you kind of like, oh my gosh, that's $900 a month or more. But the deal with one thing is never forget that we get to write off certain things that we in a house that you don't normally get to. So that difference may, if I'm right, probably about $400 to $500 a month difference now, instead of between 2,000 and 2,900. With the write-offs you can get, maybe it's at $2,500 payment net. Is that about right?
Yeah, I don't know the actual numbers, but you're absolutely right. I mean, you get the mortgage interest, 1098 mortgage interest deduction on your taxes. You're paying down the principal, so eventually, you're paying down what you owe,
Right.
and the mortgage is temporary. I mean, what's left in reoccurring? You've got maybe HOAs, but this client doesn't want HOAs,
Right.
taxes, and insurance.
Mhm.
So they're going to be paying a little bit more right now because they're putting 3.5% down. They're going to do mortgage insurance, but as rates go down, we can continue to lower their payment, and they're paying down their principal every single month and helping eliminate that debt to get them into a better financial standpoint. So, yeah, it might cost $900 more per month, but I would say that's a $900 a month investment in their family's future financial security and their ability to get the equity in the future so that they're not having to pay 100% interest on their rent with nothing to show for it at the end of 30 years.
I think too, on top of that, I mean, rent's been increasing like crazy just over the last couple of years. Someone was just telling me last week that their landlord raised their rent $200. They're locked in at this too. So even if it's $900, 30 years down the road, which, I mean, you already explained that it can go lower as soon as they get rid of private mortgage insurance and a couple of different things, but rent's not going to get any cheaper.
Right.
Too. So even thinking I mean, that's 30 years, but even thinking a couple years down the road, it's not that going to be that much big of a difference. People need to realize that.
Guys, I don't know if I've used this example before, but would any of your clients want to take a 1-year fixed loan that could go variable and we have no idea how much it would go up the following year? No, probably not.
Absolutely.
But that's what people are signing up when they're paying rent and they
Yeah.
get a rental contract. You're fixed for 12 months, which in the scheme of things is a very short period of time. And you have no idea what that rent's going to increase to. It's not locked in. You have no write-offs. You have no upside for the appreciation. So, who wants to take a 1-year variable mortgage? Nobody. Most mortgages right now are 30-year fixed. We know they're not going to be variable. We could even do the 2-1 buy down program where we're buying down the interest rate for the first 2 years. We lower it 2% the first year, 1% the second year, and within that time, maybe we'll be, in the 4s or lower 5s by that point. So, I don't know if you guys have heard that one before, but I thought that was interesting. The 1-year variable mortgage compared to, your rental contract.
That's a good way
right
to
now.
put it.
Another thing, Sean, that I thought, what you just it triggered in my mind. First of all, great example on that on the 1 year, because you're right, because the landlord can raise every time too. But another thing that we're seeing as well is people that have been locked in maybe 1 or 2 years into their lease, or they signed a 2-year lease just to get a better payment, whatever it may be. But sometimes landlords are like, "Yeah, we're kind of done with this property," and sell it. And
Yeah, you
now
never
you
know
have
who
to
your
go.
next landlord is going to be, right?
Well, if there's going to be a landlord, because that next person who's buying that house may
They
not
might
want to
wanna
be a
move
landlord
into it.
anymore. And now you
Right.
have to go find another apartment or another house or whatever it is you're going to rent. So it can be cumbersome. So this, I think what's great about, with David sticking with these clients, and I'm sure that they're excited about this too, would love to kind of get their feedback of the process that they went through. It's always good to have, so you can share these experiences. But what you find out is that, okay, now I have some sense of with a common thread. We've probably mentioned this in multiple different ways already, but now I have this comfort knowing that this is my home, and the only way that it's going to go sideways is because of me, and not anybody else is going to control of my destiny. I'm control of my destiny. So house improvements, equity stuff, making payments, all that stuff is on us now, which is nice to know that um, you get to control the situation, and how you control it is up to you. So that's kind of cool. Very excited for them. Are they a younger couple or older couple?
They're a younger couple. They're about my age, so like late 20s, early 30s. Yeah.
First house, obviously.
First home.
So a lot of hard work, blood, sweat, and tears to kind of save up enough money, and
a lot of different emotions and whatnot going through. Yeah.
It's always fun to buy your first house. I remember mine. It was a cool experience, and then kind of you learn a lot when you're going through that, especially with an FHA. Were they 5% down, 10% down, Sean?
Listen to this: 3.5% down.
Wow.
We got them. David asked me to take a look at it after another lender just kind of did their down and dirty quick look. Turns out they had multiple jobs, multiple variable jobs, seasonal jobs. We had to break out, base income, tips, overtime, and we were able to take them from 350 up to 420, and they were just trying to get up to 400,000. So, I appreciate their time and effort and doing the homework up front. They even made a comment once like, why are you asking for all of this information right now? We're not even under contract. And it's like, well, we're going to make your experience a lot better once you are under contract, because, could you imagine trying to do all this paperwork, try to get in touch with your HR people who aren't responding, do this, do that, meet you guys for the inspections, send your money for the deposit, coordinate with escrow, all at the same time. So we spent a few extra weeks on the front end collecting all the information, having my team review it, and we know without a doubt that David's next offer with them won't fall out of contract, because we've done the due diligence. They know what to expect, and we know that the money's going to be there on closing day.
Yeah.
What are some of the things that you learned during this process? So obviously, with the first-time buyer, you've had other buyers before, but what is a golden nugget that you took out of this experience so far? And I know this is still fresh. We have a little bit to go on here, but what are some of the things that you took out of it so far?
Well, I just learned. So I talked to them, like he was saying, they're already working with another lender. They kind of show me their rate and everything, and I keep track of the rates weekly too. And I was kind of like, seems a little bit off or whatever. They're kind of telling me some stuff. I'm like, okay, well, did you talk to your lender about this, or did you talk to your lender about this? They're like, no. And I'm like, okay, like, especially being a first-time home buyer at these price points, you obviously think a big thing too. Sean told me a while back, it's financial planning, being like, hey, this is where you're at. So it's always good to talk to someone sooner than later. Even if you think maybe you're a year or two away, go talk to someone now to see where you're at, because you might be closer than you think you are. Or in the other spectrum, you might be farther, but at least and you can go in and kind of financially plan around that way. And especially for them, like these particular clients we're talking about, the difference between buying a house out here in the desert between 350 and up to 420 is a huge difference in the quality of home in the area that you can get. And this is by just simply making out a phone call, putting them in touch with Sean, and using our resources that we have over here. And this is how we work. And I'm super grateful for the opportunity to work with you guys and actually have this come to fruition, at least up to this point. So that's what I would say.
Very cool, man. I love how this has all kind of come together. And, it's a relationship that started with Sean and I years ago, and then David joined the team, and now they've built out the relationship. And it's just kind of a gift that keeps on giving. A little bit of communication goes a long ways, right, brother?
Snowball of love.
Snowball of love. Kumbaya. We should hold hands and dance around in circles and do some fun things. But
no, it's nice when it works out, though. But it's a lot of grit. It's a lot of hard work. And you were saying earlier, like, not a great time to get in the market for David starting 2 years ago. I think it's actually one of the best opportunities, especially with all the changes recently, because he's putting in the hard work. He has very low expectations. He knows what it's going to take, and it wasn't just handed to him in a great market. So we have to know how to prospect. We have to know how to, set our boundaries with buyers who want to go see properties when they're not pre-approved, or looking at properties that, are way over the price point for what they want to make their monthly payment be. So I think he's learning all the really great lessons right now.
Yeah, dude. I mean, that's just so good right there. And I think, if you're listening to this or watching this, or you come back and listen, rewind that for a couple of things for what David just kind of talked about too. But really hear what Sean said is, especially if you're an agent, a newer agent coming in this, make sure that your your buyers, especially with having these new forms and all these great things that the Department of Justice has given to us to have fun with, but is make sure that you're not chasing a leaf, blowing in the wind. Because if these guys are not pre-qualified right now, again, especially right now, this is kind of the warning is we're going to start seeing multiple offers. If rates are going to drop, what Sean is saying that they are is even a quarter point is going to create a little bit of more demand all of a sudden. Like, okay, now things that were not feasible at 7.75% are a little bit more appetizing at 5.756%. And we just do not have here, and it could be changed. And if you're watching this in a different state, that's possibly different, but reach out to us and talk to us. And if that's the case, if you're looking for a home and you don't have a realtor in that state, reach out to us. David and I have connections, not only across the United States, but across the world. And obviously Sean's licensed in 40 states throughout there. So if you're looking for a resource, do that. But just be sure when you're taking your clients out, or if you're a buyer, is kind of get that one step out of the way. Get pre-approved, know exactly what you're working to. So if you do go in a multiple offer situation, know exactly when to get in, or if it gets too much, know exactly where to get out. So
let me tell a quick story. I have a client that was pre-approved for 375. They wanted to go look at properties at 425. They wanted to go look at properties at 475 because that's the price range that they wanted to be in. Multiple times we've discussed their max payment, what they're comfortable with, and that fell around 400,000. We added a co-borrower, we added a parent to help them qualify for that 450. We actually got them qualified up to 460, and we recalculated all the payments for them. And at the end of the day, they decided, yeah, that's just too much. Even though you can get qualified for more, even though you want to go look at properties that are more expensive, let's really hone in on the realm of possibility with what you're comfortable with, and really setting up your household finances to make sure that, if you're conservative, let's take $200 a month off. If you have a side hustle and you're making some cash that I don't see, or you've got a roommate there, there's all different kinds of ways of splitting this up. But the most important thing with any buyer is that you love the home and that you're going to see properties that you can actually be in, that you can see yourself in, and that you can sleep at night with the monthly payment.
It's not fun being stressed out over if you're trying to stretch it too far, right?
Right.
Yeah, I think, the big thing too, especially around in this area, is we kind of get wrapped up, and I know that a lot of people have heard this before, but sometimes we kind of get wrapped up that we have to keep up with the Joneses, or my buddy has this home that is everything that I want, but I'm not at that spot that I can afford it. Listen, just keep working. It's better to start building equity now and build slowly than trying to get everything off at one spot and be stressed. Exactly what David said on here. So I think especially we're in David's market, where he's kind of, his marketplace is a lot from that 25 to 35 to 40-year-old, maybe, first time home buyers that really, and he does a good job of this, is like coaching, like, hey, take this now and then build some equity and then use that equity to go get something later. And take the baby steps. And I see so much, Sean, you said it too. And I'm saying there's like, well, I want this. I want the 3-bedroom house with a pool, and I only need to have this view. And yeah, I'm going to be mortgaged to the hilt, but I've got to do it. And it's really more ego. At the end of the day, is no one really cares.
Nobody
Get a house
cares.
that you like, build some equity onto it. Are they nice to have? Absolutely. don't get me wrong. It's awesome to have, those bells and whistles, but there's always going to be a house there for you. And just, be comfortable with it, that it's not killing you or destroying a relationship or whatever that is, because we're stressed out on money.
Absolutely.
Yeah.
Yeah. Nobody cares about the house you live in, the car you drive,
Nope.
what watch you're wearing. I was thinking about that this weekend, actually. I always wanted a Rolex, and as soon as I could afford one, I didn't really want one anymore.
Right.
And I was going to nickname my baby Rolex because he's my new Rolex because he's so expensive.
Yeah. Right. You get to take him everywhere too. So that's the best part about it.
Got him on my arm. Yeah.
I don't want to, and I've had this conversations, and you guys have fill in this, everything. I don't want to poo-poo the idea. If you get to the spot in your life that you buy a $2 million or $3 million house, that's awesome. Good for you. Don't keep pursuing that. That's awesome. I'm just saying, don't get discouraged if you don't get it out the right way. Okay. I got this one. What's the next one? It's this constant pursuit of what I always will say, constant pursuit of perfection and settling on excellence. And so when you get to that spot, great. Okay, I got this one, and like in a couple of years, I wanted to have this type of house, and I'm going to use this equity to circumvent this cost from what I didn't have before. So
Yeah.
I just think don't worry about taking the whole chunk of cheese right now. Get in right now. I'm telling you, especially in this area. And it's probably going to, realistically, if interest rates, it's going to affect all nationwide, because I still think we're in a massive house shortage period. Go ahead and get that condo, get that 2-bedroom house that's, maybe 1,000 square feet smaller than you want to. Just build some equity, because there's going to be someone else behind you that's looking to do the same thing. And they're going to pay the difference between what you bought it for and what you sell it for. And that's where you're going to make your money.
Yeah.
So anything else, man? That's just, what I loved about today, we were going to go a way different direction today.
Yeah, we were. But this is probably one of the best ones we've done recently. And I love it. I love the real life in the trenches stories.
Yeah.
And David, thanks for coming on today. I
appreciate it. I didn't know I would be here till about 5 minutes before, but it's awesome to be here.
So this turned out to be super
totally organic, totally unscripted. Jinx, you owe me a Coke. But
see this piece of paper? This is what we were going to talk about today. So anyway, we're done with that. But guys, I just really appreciate you guys tuning into us. And I know that we're very organic. Just one thing that you may or may not know about Sean LaRue and I, and now David here, is when we do these podcasts, we don't have any people that pay for advertising for us. We don't have any sponsors and all that stuff. So this is organic. So one thing that we ask for you, first of all, thank you for watching. Yes, we would love for you to subscribe to our channel. Yes, we would love for you to hit that notification bell. So when that time comes that we put out new episodes, which is typically once a week, you get notified. But our payment for you watching this show is to share the show. Share it with somebody you want to. Take the link, stick it in, and text 5 of your friends or 5 of your family members. Like, God, there was some really good information, especially what David was talking about today, who specializes in that, that first-time home buyer market. And then you got Sean LaRue, who was with us, licensed in 40 different states. David took his client, who was already talking to a different mortgage officer, kind of giving the runaround, not giving the real numbers, and then ended up getting these people not only more money, but a better rate. I mean, that's a big deal. And that's the type of care that not only Sean does, but also David does as well. We go back to, you can watch the other 5, 6 episodes that we've done over the last month and a half. I mean, that's the reason why Team Armstrong and Sean LaRue of Sean LaRue Homes have collaborated. So reach out to us. Let us be your resource. Even if you end up going a different way, at least we can give you open and honest information, because David just said, and Sean and I have said it before in the past, is that there's a lot of misinformation out there, and there's a lot of people that are just looking out for themselves and not for you. And that's why we do this stuff, because we know we hear it every day. So Any final words for you? Kind of felt like that was a big soapbox, so I'm sorry about that. But any final
I
words
was
for
just
you,
going to
Sean?
piggyback on that last comment. Sean LaRue Home Loans. You can subscribe to me on the socials and the YouTubes there. But you know, David mentioned earlier that the news is very broad. It's very vague and it doesn't apply to your situation specifically. And I feel like we've talked about this a lot. These client situation was very specific. You have to roll up your sleeves and talk to somebody very, that cares and that is interested. And that's what we're here for. And you know, you got to speak to somebody about your specific situation, run the test like a doctor or an attorney to find out what's in your best interest for your situation. So
I think you mentioned before a while back, correct me if I'm wrong, Sean, loans are like tailored suits. They fit everyone differently, right? They're unique
I
to
love that.
everyone's
Yeah,
situation.
absolutely.
This guy, dude.
I remember.
Look at this guy. What the heck?
What?
Anyways, guys, we appreciate you very much. As I said to you, so if you haven't done so yet, hit that subscribe button, hit that notification bell. As you said, Sean LaRue Home Loans. You can follow him on YouTube. You can follow this guy and David Team Armstrong, or as I said, you just look right behind us. Anything that has Team Armstrong on it, if it's our names are attached to it, follow that one and follow that label. So until we talk to each other next week, guys, stay safe. But most of all, God bless. Have a great week, guys. Take care.